I'm here with Emmanuel Sharifi from Sika. I'm really excited to meet you, Emmanuel. It's actually the first time we've met, and thank you for making time in your busy schedule in London. I think you're here for the week, and thanks for meeting us. It's actually very early in the morning, and thanks for making it. Very excited to talk about Sika. Got some friends that have recently joined your company, and it sounds like you're doing something quite exciting in especially emerging market currencies. And I'm always excited to speak to companies who are offering what I like to think as nirvana for certain solutions, and it sounds to me like Sika has that. So before we actually go into what Sika is, let's talk a little bit about you, where you come from, how you set up Sika, and where you see the business going. And so, yeah, if you don't mind just giving us a little background about you and the business you're setting up.
Awesome. Thanks, Sam. A real pleasure to meet you as well. And yeah, happy to share a little bit more about my background and, a bit more about what we're doing at Sika. So yeah, Ghanaian, grew up in Ghana, did my early education in Ghana, studied finance for my undergrad, did business administration and strategy as well. And post that, I've had opportunity to work across multiple, markets, mostly across Africa. I did work in the Middle East as well, and also did some work across the US and also lightly in Europe. I've always been a builder. I love to think of myself as such. I've been in product and commercial roles, a few operational roles here and there, but mostly, been within technical product roles in my career. I started my career with investment banking, moved on to a company, a group holding that had a bank, securities company, and also an insurance, worked across the insurance extensively. So I did a bit of underwriting, commercial and distribution from there. And, was in and out of the bank as well. And then moved on to work with a company based in Oregon, building solutions and infrastructures for securities and brokerage companies. And in that company, I learned a lot where I was, director for business and product, built market infrastructures, in and across Africa as well, whilst working for them. Did join a venture where I was a co-founder. I led the technical aspect of building market infrastructures. We did, work with a lot of banks in and around, Africa, with partners in Europe like Finastra, Fintech OS, FIS, etc. And my last job before starting Sika was with a company in the Middle East. I think at the time they were the largest exchange, where I was leading banking and payments as the head of product. So, obviously working in and across, the emerging markets and then also the global north extensively gave me a 360 view of how most markets operate. So that's a bit about my background.
Okay, thank you very much. Thanks for that. And so what led you to taking the leap and setting up Sika as a founder? I mean, it's a big step to take, and it's a big problem you're trying to address. And how did that come about?
Yeah, so, obviously starting off with giving a background of my, career and everything else. One of the things that, obviously traveling, working, and seeing across both the global north and the global south taught me was that when you come to the global north, the markets are very organized. The way, systems and processes, operate are quite different. And one thing I was very curious about is why is the market on this side much more efficient than the market on the other side? And, a lot of startups are trying to innovate or have innovated, built, banking solutions, payment solutions, other great, technologies and platforms and infrastructures to help solve the gaps within the global south. But then for me, it was more of a quest. And the quest was, what is the core problem that nobody's solving? And, it took some time. I had to dig deeper. And one of the things I realized is that when you come to the global south, some of the problems are very similar. And I, realized that it was all related to currencies. So whether you're a payment processing company and you collect for most of the, merchants in those markets, well, the first problem you have to encounter is you have to plug into multiple local payment methods, because the fact that cards have high acceptance rates in Europe or North America doesn't mean that when you go to Malawi, well, they use card, or when you go to Brazil, they use cards. So you find that often there are local payment methods that have high acceptance ratios in those markets, like PIX, like OXXO in Mexico, like M-Pesa in Kenya, like mobile money across multiple parts of Africa. So the fragmentation was one thing. But then let's say you get over that hurdle, you collect payments you plug into all these local payment methods, you collect all the payments. Now, most of the merchants you'll be collecting for are predominantly Western businesses who sit in Europe, America, and other markets, China, etc. And they don't recognize revenues in those local currencies necessarily, right? So the biggest challenge most of them would face is, okay, we've aggregated a lot of Naira, we've aggregated a lot of, Mexican pesos or Brazilian real, but then we're an American business, we need dollars, right? Or we need sterling. So then that's where currencies come in. But then the challenge you're also going to face within those markets is that most of the currencies are based off, commodities, precious minerals, because most of those economies are, backed by, most of those, commodities, right? So the currencies are very volatile because once the commodities market shifts, it means there's either more demand or less demand for your currency. And, the depth of the market is also determined by how much demand there is for your currency. So often, unlike, quasi-stable currencies like the AED, or, very stable currencies or liquid currencies like the sterling and the dollars and euros and JPY, you will find that most of these currencies are not stable at all, especially the frontier currencies. And I was recently discussing this with a team, right? For us internally, rather than categorizing currencies into exotic and hard, two currencies, we're like, no. We have like 5, classifications, where some frontier market currencies are even more volatile than the others, right? So, for instance, it would be very wrong to even consider a currency like, the Malawian kwacha or the Zambian or the Mozambique Metico to the rand, the South African rand, right? Or even, the Kenyan shillings, right? So we came up with classifications to identify them differently based on how exotic or how liquid or illiquid those currencies are. But then, back to the story. Most of these markets with those similarities often wouldn't have the liquidity to help companies that process in their local currencies to move out, because currency controls, capital controls in those markets require that you process in the local currency. For instance, if you're an airline and you're selling your ticket in Nigeria, well, you can't sell it in dirhams because nobody spends dirhams there. So you have to process it in Naira, right? But then once you aggregate, let's say you're aggregating $1 million worth of Naira every single day, how easy is it for you to move that Naira back into AED? So often what most of them will do is they will triangulate through the dollar, because and it puts a lot of constraint on the dollar. Very inefficient, right? So you move to the dollar, you get the dollar, then you have to off-ramp from the dollar back to the AED, which then, the on-ramping cost is very high. The off-ramping cost is also very high. So most of the time, some of the customers we serve today, before told us they spend between 10 to 15% going through the banks, and the banks will also have to source for liquidity, right, into the other currencies that they are off ramping into. So there are layers upon layers upon layers, which is through the corresponding banking network. So I mean, generally, all these challenges coupled together, right, gave me the idea or the direction after the investigation to build what we're doing. One thing that I did understand and appreciate is that it's going to be a long journey.
I mean, what a challenge! What a challenge!
Yeah, and nobody has actually built in this direction. I mean, who wakes up and says, "I'm going to build a market infrastructure for clearing or a CCP"? I mean, the concept is fairly not even understood, especially across the global South. So, well, I mean, back directly to your question, it was infrastructure gaps, and then it was also, the way the market is organized, which brought me into this world of building Sika. Yeah.
Right. So you're looking to make a very inefficient market much more efficient, and how are you going to go about that, if you don't mind, just in a nutshell, for people that maybe aren't that familiar with the complexities of the African market? What's the efficiency that you're bringing?
Well, I mean, the efficiency we're bringing is making capital more efficient, and I'll explain that. We're solving, one of the biggest challenges, which is liquidity, and then also the trust, which is often, associated with counterparty risk. Now, if you are a global corporate, let's say, a commodities company, and you have to buy, stuff from your suppliers, right? And you have to, source for the local currency to pay. Let's say you sit in Japan and you need car parts, and maybe you have to buy some, metals from, let's say, Nigeria, right? Now, there are two ways, right? The first thing is you would go to the bank and say, hey, I need some Nigerian naira to pay my supplier who's giving me the minerals the metals in Nigeria. The other way is if you have a counterparty who says, well, I have need for the Japanese, yen, and exchange with them because, you might find a bilateral match. But then let's assume you find a bilateral match. The biggest challenge is often counterparty risks. Who is going to send the money first, right? Are you going to send your JPY first and, hope to receive the Naira, or is the guy going to send you the Naira and hope to receive the JPY? So often there's no trust, right? And the global south is also riddled with a lot of trust. Now, when we talk about capital efficiency, if you're going through large market infrastructures, especially you're familiar with the likes of, the CLSs and all that, you'd have to lock up some capital, right, in order to, especially to control mutualized, losses, as most clearing houses would do. Yeah. So in the global south, nobody's going to do that because the money is already constrained and people don't lock up capital. And the settlements, capital. Exactly, the settlements have to be, almost instant, almost real time, right? So what we've done is designed, a whole, CCP model foundationally that is perfect fix for the global south.
Let's just explain what CCP is for those people that don't understand. Central-counterparty.
Central-counterparty.
Which is what Sika is
building, more of like the base of our infrastructure, the way we're built. So so what we've basically designed is basically to give companies as such the ability to have zero trust, go into the market, and markets that are often, illiquid, and we give them the opportunity to be able to settle their flows, exchange their settlements as a settlement infrastructure in a very trusted way. So we sit in the middle of the market where all buyers for, currencies that we support will come to us, and we do give them the ability to, sell to us, and then we become the sellers to anybody who's also buying on the other leg. So we use methods like multilateral netting, which means that, in the scenario I explained before, we don't find only bilateral matches, which is one of the reasons why liquidity is also constrained. Because think about the possibility of finding perfect matches between two people all the time. Exactly. But then if you have Japanese, yen, and you're looking for Naira, and there's somebody who is selling the Naira, they probably don't need the Japanese yen. Probably they need sterling, right? But then the guy who also has the selling probably needs Kenyan shillings, and the guy who has Kenyan shillings probably needs dollars, right? So we use a very complex algorithm to, do the multilateral netting, which improves liquidity, because at the end of the day, it creates a lot of concentration after the matching of liquidity on there. And one of the concepts that we also pioneered in the market is what we call the multi-layered liquidity nexus. So there's a first layer, which is a netting pool, which obviously improves the liquidity efficiency within those currencies. The second concept is basically mapping market makers to each and every currency we serve as a second layer. So if the netting pool doesn't cover the liquidity needs or demands on the platform, what we do is that then the system recommends the market makers that can cover your long and short positions in those markets
to support that.
And then there's a third layer, which is basically using our balance sheet as matching liquidity on the platform. So those are the three different layers on it. And so that's how the liquidity bit, comes across. And then for the risk, we sit in the market as, the middle guy who gives you the zero trust. So what we've done is in every market, we have settlement accounts. So if a counterparty comes to us and wants to fund their position in order to exchange or settle another currency, it becomes a local transaction. So the guy who is selling the Naira would fund the Naira leg or position into our Naira account or Nigerian account. And then the guy who's funding the JPY and probably needs the Naira would fund the JPY into our JPY account. So it becomes a local RTGS transaction. So in terms of speed, it gives you a very easy, access to,
Well, this is the other problem that I've come across with some of the companies I speak to in Africa. Settlement times are a real issue because obviously currency risk and volatility. So T+2 is just, it's
too much.
It's too much. In more stable currencies, it can be acceptable, but not in Africa. So what I understand from your system is that you're going to reduce settlement times almost to same day or within an hour or something. Is that correct?
Correct. And that's because we're able to do this and give settlement finality because we don't rely on third-party infrastructures to give settlement finality, right? What we've built is an on-net infrastructure that has its own cycles, settlement windows, etc. So let's say you have to fund your Naira position now. The market is open. Once you book your settlement and you complete that, it goes to pre-confirmation until you fund that position. So you fund that leg, and we do simultaneous settlement. So using payment versus payment. So with that, every counterparty will have to fund their position, and that's how we lock, and reduce risks on the platform. So if your position is not funded, it means it won't settle and wouldn't be considered into the netting pool. So once you fund your leg, what we've done is we've designed a cross-market local settlement. Money doesn't move across borders.
Right.
So we aggregate a local position and then settle it against, what other buy and sell there is. So we interface every buyer and interface every seller. We're a seller to every buyer to every seller. So to reduce that time, if the guy funds a Naira position and there's another counterparty who has maybe sterling, and the guy is looking, the Naira, corporate is looking for sterling, that sterling position would move from maybe, a backlist to a Standard Chartered bank locally in the UK. So it becomes a local transaction then. It doesn't have to cross borders and go through intermediary banks. So that's how the efficiency
is increased massively. That's fantastic.
Exactly, yeah.
One of the questions I've got going on in my mind while you're speaking is how on earth did Emmanuel get the critical mass required to make this happen? So when you start a project like this, you've got empty boxes basically. You need to fill those boxes with currencies. How do you do that? I mean, is that the secret sauce that you're not going to let anybody know? I mean, how do you get the momentum and the critical mass to make this platform work? And as it builds, the network effect of having more customers and more currencies in your boxes is going to increase the efficiency of everything. You'll be able to take on more customers. But I'm just amazed at how you can start a project like this, which is massive.
Yeah. I mean, for me, right, you go to those who have the problem, have been hit hard by the problem enough to care about it. And at the point, no matter how small you are, if somebody's desperate for a solution and you come, with the right technology at the right time, we've had a lot of companies, a lot of large corporates wouldn't deal with fairly new businesses, especially with the trust and et cetera. But we've had some really large companies, global large companies, that we've been very fortunate to do business for. And to give us the trust, it means that the problem we're solving it's a validation for the problem we're solving, because they've probably suffered enough to be, to want a solution, and obviously, helping them and also bringing that solution, tick the boxes. And then, from there, most of up till now, we've not spent $1 on marketing.
Wow.
It's all been inbound customer referrals and, our commercial team, doing the work. But then we've been very fortunate to have people use our service, believe in it enough, and be like, wow, can I bring this other guy who, so it's almost been, the last 12 months has almost been, we're just, the last 12 months has just been, a lot of referrals and people really,
Well, building the network, and
Correct.
it has a sort of the momentum builds when the referrals.
Exactly, yeah.
You're solving this problem for this person, and then they hear another person hears about it, and then they get on the network, and the whole thing becomes a virtuous circle.
Circle.
Yeah. I mean, you mentioned some very big names to me previously. I'm not sure if you can name them publicly, but some very impressive names are using your platform, household names globally. It's very good to hear.
Yeah.
So where did you start? Which country or currency did you start with?
I'd say Kenya.
Right.
Kenya's been very impressive for us. It offered a very soft landing for us. So, we started off really in Kenya. Most recently got a central bank authorization for our activities there with some bank partners as well. And we have that in a few markets, Ethiopia and so on and so forth. But yeah, I mean, I'll say Kenya was that market for us.
Okay.
Yeah.
And then Ghana.
Yeah,
Ghana,
and then
Nigeria,
Ethiopia, Malawi.
Wow.
We've done stuff in Rwanda, and most of the French West African countries as well. Yeah.
And I understand you're moving, or if not already there, in South America, and then
Correct.
India.
Yeah, so we're listing the BRL, MXN, INR, CNY, probably the Thai baht as well. Yeah.
And what about Indonesia? And what about countries where NDFs are more frequently traded rather than the actual cash, the underlying cash? When people see a price for Indonesian rupiah, that's deliverable rather than an NDF price? Is that right?
Yeah.
Offshore.
Yeah. But our approach to scaling, I mean, as you would appreciate, what we're doing is a very controlled, highly regulated business. So we take a lot of critical things into consideration to scale market. First of all, we're looking to markets with the highest, turnovers and, obviously demand. And then we look at the regulatory approach or landscape in those markets. And then also, obviously, your settlement bank partners.
Yeah.
We're not at a stage yet where we will be holding nostrils with the central banks. We're working on it. But then, you have to work with tier 1, tier 2 banks to, because you need to build that confidence and trust with the partners you work with as well. So we have a currency roadmap, and this approach we take in doing that. So, the listings have been very carefully orchestrated in the last few as well.
Right. Okay. Good. And so in terms of the roadmap, are you able to say what the next 12 months, 24 months looks like in terms of currencies that are going to be coming on? Or is that...
Yeah, absolutely. I mean, for us, the roadmap is very clear. We recently launched our new settlement infrastructure, an upgrade of what we had before, which is called Clearnet. I'm very excited about Clearnet. That's the platform that does all these amazing things. The goal is we're working on engaging a few central banks. Obviously, that's a very critical part of the adoption to get the central banks on board, which brings structure and somewhat, a system in place, an organized form in place in the global south. So that's one of the things on the roadmap. And the other thing on the roadmap is we're working towards, achieving status as an FMI in one of those key markets that we serve. Yeah.
Okay. And where are the headquarters of Sika? New York, is it, or?
Yeah, so we're headquarters in the US. It's a Delaware company, but then we are also trying to spin off a few sub holdings.
I saw from your website you've got office in London, Kenya, Nigeria, a couple of other places I can't remember, but yeah. So
Ghana, UAE, Portugal. Yeah,
global multinational already.
Yeah. Unfortunately, for a business like this, you'd have to be global from the start.
Which means a lot of traveling for you. A lot of traveling.
So I love to, there's this running joke where I always tell people I'm homeless because I don't have one home. I'm almost always at a place. And most often when I get to, a city or a place and I see a few friends there, they're like, oh, so when are you off? And I feel so bad because it's almost like, well, now everybody's like, well, if we have you here, we have you briefly. So we might have...
Not settling.
Yeah.
Well, in terms of the customers that you have, can you just give a sense of what the perfect customer fit is for Sika today? So somebody picks up the phone and you go, oh, you're a perfect fit for us. What does that look like?
So we have three customer segments. Number one, global corporates. So think about, global businesses who have customers across the global south.
Airlines,
commodities
house,
companies, logistics, manufacturers. You're basically buying or selling across markets, and often you'd face the most challenge if you're dealing with the global south with all the things or all the problems I mentioned. So that's number one. Number two, the banks and the financial institutions, right? So you have a lot of banks who want to understand netting efficiency. They have a lot of customers or members on their platforms, or who come to them to say, hey, I want maybe this currency or that currency, but then how can they do that more efficiently and connecting to the right counterparties rather than only being restricted to correspondent banks, but then also within their own regional global markets, how to understand their own netting efficiency as an infrastructure. So we have a white label aspect of the system that helps financial institutions and large
That's an important point. So a bank could white label your solution.
Absolutely.
That's potentially huge.
Yeah, absolutely. Right. And we're in a few conversations with some really large banks in the global north who have some of these challenges across the global south. So yeah, I mean that's the second segment, and then the third, obviously the fintechs. So this is any company from a remittance company who often sit on hard currencies, looking for exotic currencies to basically payment processing companies who collect a lot of these emerging market currencies or frontier market currencies, and often their merchants sit in their global north and they would be sourcing for G3, G4, G7, or G20. So we do support those as well.
Okay, and in terms of crypto or stable coins, which are becoming more and more developed in terms of infrastructure for TradFi, crossing over with DeFi, what's your position with, for example, Tether, Circle, those sort of currencies? Are they just another currency for you? Do you use them as a mechanism for triangulation? I mean, I know you're trying to move away from triangulation, so I'm assuming that the stable coins are just treated as another currency.
Correct. So we treat stablecoins as another currency. I mean, they've gained, popularity in the last few, and one of the things they help, especially with in most of this global south markets, the dollar is constrained, right? Everybody's chasing the dollar, or the sterling, etc. So you need another currency that has liquidity enough. Even if it's not settlement finality, or they don't accept it as a final currency of settlement, you'd want something that you can easily move into that's liquid enough. So we use that, as a means to, settle a few, customers who accept, corporates who accept, stable coins. But then for us, it's also a currency, right? Because it's popular, very widely accepted now, and it's liquid.
Which I mean, the stablecoin market is expanding. There are household names like Tether and Circle. Do you go beyond that, or is it really just Tether and Circle?
Just Tether and Circle. Yeah. We try to be very controlled and restricted. Obviously, like I mentioned, it's a highly regulated business, and you'd want to take your time to make sure things are matured before you dip your hands into it. So in as much as we're solving for a market that is often riddled with risk, we also try to control the risks before it happens. Yeah.
I mean, the India rupee is very, very controlled. Any sense of where that market, if it may change at all, do you think it may open up a little bit more, maybe using a platform like Sika, because the risk is minimized? Do you think Sika may help the Indian rupee market become a little bit more international? It's a massive...
No, it is,
but it may happen.
I think it will get to a point where some of these things will become much of an imperative for such markets. When you take India, for example, India trades with Africa about $90 billion a year. Think about that, right? And they're trading with the South African rand, the Kenyan shillings, Egyptian pound, Nigerian naira, Ghana cedis. At least I think those are some of the top 5 currencies, right? So with that, you don't have a direct pair between the Indian rupees and these currencies. But then how can you open up and scale trade? And just like you mentioned, a lot of, corporates also, talk to us quite a few, and one of the challenges they've had is especially between the INR and then the NGN, which is the Nigerian Naira and the rupees, right? So obviously with an infrastructure like this, it creates the ability for markets. It opens up market, especially with how, global trades in the last couple of months have been, reorganized, especially a lot of countries are beginning to look.
We're talking about tariffs, US tariffs,
yeah,
and the realignment of relationships.
Exactly.
And,
So you'd see a lot more regional movement, and some very interesting markets and corridors opening up. I mean, think about CNY and BRL. China is buying grains from Brazil, right? So you'd find that with markets opening up, realignment of global trade, supply chain, etc., it opens up, some of these conversations and some of these infrastructures to guarantee trade across the globe. And, every day, as fascinating when I say this as it sounds, there's over $8 trillion that exchange hands every single day, just, for global trade. Yeah.
And another separate question, and this is probably quite personal in the sense that, it goes into a little bit of the background of Sika in terms of the backing of the company. So could you reassure a potential customer, Sika's a startup, how can I trust, putting my funds with them? Is there bank backing, VC backing? What's the kind of situation in terms of the backing of the company?
Yeah, we have VC backing. Obviously, building infrastructure business needs a lot of capital upfront. We start off this bootstrapping. I have to spend every penny I have.
I know the feeling.
Squeeze everything into it, just because you believe in it, right? And you know the potential skill for something like this. It's a $2 trillion daily market, and just for context, CLS is settling over $7 trillion a day, mostly matured market. Currencies, right? So across the global south, when we size this is over $2 trillion daily, not even annual. So it's a good problem to have. Obviously, the market size is huge, but then often you wouldn't find VCs that are understand the emerging markets as much as that familiar with it. So getting the right, attracting the right capital to scale and grow could be a bit challenging, but then I'm very grateful for some of the VCs that have backed us till this date, and we're still bringing on a few more people, scaling capital to be able to efficiently grow and be very sustainable.
It sounds to me like you've solved the 0 to 1 problem, as it's called. Now you're active. Now you've actually done the work of building out the concept. You're live. You've got clients. Now it's a question of scaling it. So the really hard, I'm not saying this isn't hard now what you're doing, but the really hard part has been done.
Correct.
Right? I'm assuming that you've got big names. I mean, we spoke about it earlier. Some of the really big names that you're working with in terms of corporates that are using your services are huge. In terms of banks and so on around the world, I presume some of those are on your network as well. You don't have to mention names, but I'm assuming there are some big emerging market type banks.
Correct. Yeah, we do have a few of those, and we're working our way, to bring on a few global north, really large banks as settlement partners as well. So yeah.
Another question, perhaps a bit cheeky and a bit presumptuous, but is Sika going to be the CLS for global south currencies? Is that in a nutshell what we're looking at here?
Well, in a nutshell, there's been a lot of reference to what we're doing with CLS, and this is coming from a lot of people who understand the markets, and they're like, yeah, you're definitely building a CLS for the global south. So I love to think of ourselves or Sika as building somewhat a CLS, but with emerging market nuances, because you can scale what is fit for the global north to the global south. So we're tailored for the emerging markets.
Similar concept.
So, similar concepts in a way, yeah.
Emmanuel, thank you very, very much. It's been fascinating talking to you, and I really do wish you all the best. Thanks a lot.
Thank you. Really appreciate it.
Yeah.